Once again, my amazing traders of the world, you are welcome to my YouTube channel. So once again, guys, in today's video, guys, I'm going to be talking about risk management, right? I caught a trade some times ago, right? And I'm going to be telling you guys, I caught a trade on eurnzd, right? Yeah, I caught a trade some weeks ago. I'm going to be telling you guys what actually happened and if the trade went our direction or not. We're going to be talking about it in this video, and I'm also going to be teaching you guys proper risk management. So guys, what I'm going to be showing you guys in this video is things that you pay for courses to get, right? And I'm giving you guys for free in this video, right? So guys, if you successfully follow these 5 steps I'm going to be showing you guys, this is how professional traders behave, right? These are the steps they use to be able to carry out effective risk. So guys, in this video, guys, I'm going to be walking you guys 5 steps of proper risk management. If you can be able to engage these 5 steps I'm going to be unveiling as we proceed in this video, you are going to be profitable, guys. It doesn't matter how bad your trading skills is. If you have a good risk management and you're able to win at least even 2 or even 3 out of 10, you will discover that you will be profitable, guys, right? What differentiates those who are successful in trading and those who eventually give up is risk management attitude. This is very key. So guys, I want you guys to watch this video from the beginning to the end. Do not miss any part, because if you do, you're going to be missing out on a very key information, because each and all of these steps I'm going to be talking about in this video are very key for your trading life. Okay, so guys, we're going to be talking about what happened in the trade we called some weeks ago. As you guys know, in this channel, most of our trade it's always going our direction, right? So I'm going to be talking about what happened. So the step 1 for proper risk steps for proper trade risk management, right? Trade plan. So guys, you need to have a trade plan before you enter into any trade. This is also part of your trading of your risk management. Okay, you need to have a trade plan. What will happen if A happen? What will happen if B happens, right? So guys, as you can see right here, this is a pair I was trading some weeks ago, right? I was able to bank profit from here to here, and the market retraced from this step, and I called out this particular trade in this channel, and the market went up and gave us almost 500 pips in this move, right? And I come again to this channel, right, and I drew a trend line from this level, right, from here to here. Sorry, I drew a Fibonacci retracement too, because I know once the market move, it has to retrace, right? So I was expecting it to retrace to the 60 to 78% of this region, but this is what happened. I already placed a trade right here, right? I risked around $200 right here. Okay, and now this is what you call trade plan. Whenever you are trading like this, you need to plan what will happen if the trade gets to here. For example, my trade plan for this trade is, if the trade hit my stop loss, I'm not going to take any other trade. I'm going to wait for it to take out these 2 levels. This is a psychological level, and this is a trend line that has been coming from since last year, right? I'm still expecting one last touch on this trend line. Okay, so once I get stopped out, I decided I'm not going to take any trade. That is part of trade plan. Okay, and if the trade goes to my profit, for example, if the trade comes here and then shoots back up, okay, the trades I will leave it, because this, my overall target for this trade was around here. This was my overall target, right? If the trade goes in my favor and comes here, right, I'm going to exit the trade right here. Okay, and whatever you tell me, I'm not going to listen, because this is my plan and I'm sticking to it. So guys, this is what you call trade plan. If A happens, what will you do? If B happens, so whatever plays out here now, I'm not shocked, I'm not surprised, because I already have a trade plan and I'm going to stick to it. This is how professional traders think, guys. Now, okay, see what eventually happened. I called out this trade in this channel. Okay, and guys, let's see what eventually happens. Let me play this. As you can see, so guys, this particular candlestick took out my trade, right, and I lost $200 right here. You know, guys, I always tell you guys in this channel that I'm right 9 out of 10 times, but there's always this one time that can always hit you hard. Okay, now in this trade, once I was taken out right here, you know, this is daily candlestick. If you look at it at 4 hours, it will take up to 4 hours into 4 or 8 places for you to cover this daily. Sure, you understand? So you will have seen a lot of red candlesticks right here. Okay, some people will say, once immediately they hit their stop loss, okay, let me just take the sell trade since the market is going to sell, right? Let me just take the sell trade. Guys, that is not how to trade. You plan before you enter a trade. You don't plan during the trade. That is a mistake a lot of you guys make, and that's why you're not successful. Okay, now look at what happened, because I already mapped out this zone right here, because this is a psychological level and the market has been responding to it for quite some time right now. Okay guys, so let me just show you guys what happens. So as you can see, the market came, for example, somebody that is trading on 1 hour time frame, this is daily. Somebody that's trading on 1 hour time frame will say, okay, since the market has been falling, it has been falling for a very long time, let me go ahead and change my bias to sell. Okay, and immediately you are entering a sell trade, the market reverses and it goes for a stop loss again. So this is how people blows up the account. So that's why it's important that you always have a trade plan. And 2, you have to evaluate what happened every time you hit your stop loss. For example, when I hit my stop loss, that was when I have to go back and check what really went wrong, right? I realized that I drew my Fibonacci retracement through wrongly, right? This is the swing low and this is the swing high. So I was supposed to draw my Fibonacci all the way from this swing low to this swing high for me to get the proper retracement. As you can see, it retraced at exactly 78%, which also matches with this psychological level. So this was supposed to be my entry for this market according to my strategy, but just because I did a little bit technical error by drawing the Fibonacci from this region, then I lost $200. So you can see how important getting your technicals right is in this market. If I had gotten my technicals right here, if I didn't draw the Fibonacci from here, if I drew it correctly from here, because this is where the move started, not here. The move started from here. Okay, if I drew it here, this will have been my stop loss, right? And this is when I will have entered the market right here. Okay, and this will have been amazing for me. So guys, I hope you guys have learned something from this trade, right? So guys, what went, and remember my bias for this market, I already did a top-down analysis for this euro NZD, and I've already told you guys almost 1,500 pips we have to catch here. But remember guys, that market did not just go straight. So even though that I know that this market is intending to come here, but you cannot really tell the market how to move. You can't really tell the market the path is going to follow. The market can go up, come down, go up, come down, finally going to your destination. That's how the market behave. The difference between those that will succeed and those that always fail is your ability to predict the right direction of the market, and then you stick to only that direction. For example, I will not enter a sell buyer. If I see any sell setup, I will not take it. Most of sell, like this setup right here, I did not take it. Yeah, I know the market was coming. I already saw it from this double top, but I did not take it. Okay, because I have a buy bias for this market, so I'm only looking for a buy setup. And when the market eventually gets to this region again, let me show you guys what happened. So immediately I saw this red candlestick again, I left the market. I never allowed to reach this level, right? I left the market immediately, get to this zone, because I know the market has been responding to this resistance level. Okay, there's a support which also serves as psychological level right here, and there's also a resistance level right here. Okay, so guys, this is what we call trade plan. You want to outline what steps you would do, what you're going to do, whatever action the market takes. Okay, so guys, let's go to our second step. So the step 2 you have to take is your risk tolerance. So guys, you need to know what your risk tolerance is. Okay, so guys, whenever you enter any trade without accepting that money you are going to be investing in that trade, you have already lost it. If you know that money you cannot lose it, do not even bother taking it, right? If you know that the money you want to invest, you don't want to lose it, do not bother taking that trade. Okay, so for example, you want to take a trade right now, and let's say you have your stop loss here. Okay, and then your take profits maybe here. I'm just using this for example. Okay, what you need to do is to carry your measurement tool, okay, and you check your stop loss to your take profits, to your entries. Okay, this market is a sell market right now because it has given you a sell signal and you want to enter for this market. Okay, Now let's just say, assume that this I'm using daily pattern, so you expect it to have a very large pips. Okay, so for example, this 180 something. Okay, let's just say 20. Okay, let me just, I don't want to use this so I do not confuse you guys. Okay, let me just say this is my total, this is my let me just say 50. Okay, let me just say you entered in a lower time frame. Okay, and 55 is your stop loss, right? You entered in a lower time frame because this signal will have showed up. If you are using like 1 hour or thereabout, you'll have known that this market is about to drop. If you are using a lower time frame, probably you entered there and you're able to use 55 pips as a stop loss. Right now, guys, what you need to do is that first of all, you have to determine what amount you can lose in this trade if it goes against you, and steps that the trade can go against you. That is the difference between those who are successful over time and those who eventually fail. Right, those who eventually fail. Okay, you need to have a risk tolerance. This is what every professional trader do. Okay, our trades that we take will pay more attention to what we're about to lose than what we're about to gain. It's okay that you can gain three of what you're investing. You can even get times 4 times 5. But as a professional trader, you don't look at what you're about to gain. You're looking at what you're about to lose, because that's what makes the difference. Okay, so if this trade goes against you, are you willing to lose this money? That will help your psychology, because in this game, psychology is key. If you already accepted that if the market goes against you, you're cool with losing that money, then you will have a peace of mind. You will not be making rash decision, and you will not go against your trade plan. You see, as you can see how the whole thing is connecting now. Risk tolerance will help you not to go against a trade plan. Once you go against your trade plan, you already failed. For example, if I have entered this trade, immediately stopped right here. Immediately stopped me out right here, because this is where my stop loss was. Immediately this can stick me out and I entered for a sell. I've already gone against my trade plan, and this made me a bad trader. I'm not a disciplined trader. If you go against your trade plan, you're a bad trader. You should punish yourself, right? Maybe you should just eat 2 times that day as your own punishment. I don't know if you understand what I'm trying to say. So this is how you think, this is how you should reason, so that you can be able to make money and then retain that money. Right, the reason now I didn't lose more money, if I've entered for a sell, I change my bias to sell and start looking for sell setup, this green bullish candle here will just take me out. This candle will just take me out and took away whatever I'm still having. So you see, that is why it's always good to have a trade plan. Okay, now let's go to the next one. The next step we're going to be talking about in this video is step 3, which is your stop loss order. Stop loss order. So guys, never you enter any trade without a stop loss order. Even though you have done your trade, your risk management, you know how much you're willing to risk, but it will be useless. This will be useless if you didn't place any stop loss order. Okay, most of you will say, okay, let me just, I will be monitoring the market. Once it gets to my region of my, once I lose 200 or once I lose $100, I will just end the go out of the market. It doesn't work like that, guys. It's always good that you use stop loss order. This will save you a lot of things. This will protect your funds, right? So that it's only what you want to lose that you will lose, so you'll not end up losing more. Okay, so it's important that you always place your stop loss order. After you have done your risk tolerance, you check the pips. Then I'm going to show you how to match your risk tolerance and your pips. After you've checked your pips, don't worry, just as we proceed, I'm going to talk about it. Right, so the number 4, I hope this is clear now. This step 3 is clear to you guys. And then let's go to the 4th one. The 4th step, which is position size calculator. Step 4 is calculate your position size, right? So guys, it is very important that you always calculate your position size. This now you can see that it's connecting the whole thing right here. You check your risk tolerance. Okay, you want to lose, let's say you want to lose $100 in this trade, right? You're risking $100. If you lose that $100, it's not going to bother you. Probably have a $1,000 account or you have a $2,000 account, right? If you lose $100, it's not going to bother you. If you lose $50, it's not going to bother you. Then you have to calculate your position size. Okay, these are the things professional traders do before entering any trade, guys. You don't just see a trade and then you click your button. No, it doesn't work like that. Okay, so you calculate your position size. You can use baby pips to do that. Okay, so let me just walk you guys through on how to do this. It's very simple. For example, you want to have a $10,000 account, right? Okay, for example, if I have a $10,000 account and then I want to take a trade, I want to risk just 1% of that account, and then my stop loss, maybe I'm trading euro USD. Okay, you can select any pair you are trading right here. Then you want to put in your stop loss. My stop loss pips, let me just assume that my stop loss pips is 50 for a particular trade. Okay, so all I need to do right now is just to press calculate. Okay, so if you check my stop loss pips, and what I want to lose is just $100, okay, which is 1% of my account. As you can see, what I can use to enter this trade now is 0.2, right? This is standard lot 0.2. This is the lot size I can use to enter this trade, and if the trade goes against me 50 pips, I will lose $100. Okay, so that is how risk management work, guys. So it's that simple, right? There are other risk calculator. There is FX book that I also use to calculate your position size. And guys, let's go to the last one. The last step we'll have to take here. So guys, the last step is to avoid FOMO, which is fear of missing out, right? A lot of you guys are always having this pump. You always feel like if you see a red candle, oh, this is a sell market, let me rush and enter so I will not miss out this move. If you see a bullish candle, say, oh, this is a buy market, let me start enter. Without, you have not carried out your trade plan, you have not checked your risk tolerance, you have not engaged your stop loss order, you have not calculated your position size, but because of you saw a bullish market or a bullish candle or a bearish candle, you just roll up and enter the market. This is what is called fear of missing out, guys. You need to avoid that. If not, you will remain a baby trader for the rest of your life. Guys, it's very important that you avoid fear of missing out. Having in mind that the market will always give peace. The market has been here for years. It has been here for years. A lot of you guys, this market was here before they born you. Me too. The market has been there before I was born, and it's going to be here when I'm gone. So there's no need for you to have that fear, because there will always be tradable opportunities. There will always be tradable opportunities depending on the strategy you are using. Okay, all you need to do is to always calm down. But calm down. Most times, one thing about forex, right? Like this place now, before this market will take off, it will give you sign. It will test here many times. If you are in this market now, you have many opportunity for you to enter it. Okay, you have many opportunity for you to enter the market. So there's no need for you to start rushing. Let me just have seen this, but let me just rush. Before you know it, you enter wrongly, and the market will immediately reverse. Immediately you enter and then go for your stop loss, because you have no trade plan, you have no strategy. So what I'm telling you now is even called strategy development. Right? This rich mathematics I'm teaching you now is called strategy development. Also, I'm giving you what people will charge you money for. I'm giving you guys for free in this channel. Okay, so guys, if you can be able to stick to all these things I've just taught you guys in this video, I promise you guys that you'll be a successful trader. Okay, whatever strategy you are using to trade, as long as you can even win 2 or 3 out of 10 times, and you're using your risk properly, right? If you win 5 out of 10 times and your risk properly, you're probably using just 1% of your account. You're really risking 1% of your account. Sometimes you win ratio 3, you win ratio 4. One of your wins might even cover all your losses. Okay, so guys, this is how this market works. As you can see, because of I engaged my strategy, that was why I did not enter the market for all this move right here. I just waited. This thing you see here took time. Oh, it's not like, you know, now it took time, this many hours, right? So it has a lot of red, so show me red, like sell, but I did not take the trade until I saw this, and then I entered for a buy. So you see, but for somebody who have changed their bias, they will just, that does not have trade plan, they'll just rush in and enter, and then they'll keep losing money front and back, and they'll never grow. They'll never have a sustainable forex trading strategy. Okay, so guys, this is amazing. So guys, now what do I think about this pair? Okay, let me step this down and go down to the forward type. What did I think about this pair? What is my thought about this pair? If you guys that have been following my channel for some time, if I've been following for my channel for some time, you will understand that there's something about forex, right? Forex will never go directly to your profit. No, it will never do that. As you can see, what is playing right here is that, you know guys, I told you guys earlier that my bias for this market is bullish, and that bias has not changed, right? The market is still going, even though it dropped right to this psychological level right here, and it is taking off. It went back to this resistance and grabbed some liquidity and then dropped again. Okay, it has effectively formed a double bottom right here, right? So this will not be a valid double bottom till this neckline is broken. Okay, the double bottom will not be valid. Yeah, this is a double bottom. Yeah, if you even enter for a sell, right, for a buy right now, you could also make profit, right? But the market still have a lot of misbehavior. A lot of things can still go wrong, because as I can begin to see another psychological level right here now, right? Let me see if I can even map it out. Let me just try to okay, there's another psychological level right here. Let me just map it out. Okay, so this is another psychological level right here. So the market can still come here and then misbehave, right, before eventually going up. Okay, so this is forex for you guys. In forex, 1 + 1 can be 20 sometimes. Forex, 1 + 1 is not always 2, guys. So even if you do your calculation, do all your maths, you expect the market to come here, but the market will play around, sometimes for weeks or even months before finally getting to this destination. So don't be surprised, guys. You know, I already told you guys this market is coming here, but it will play till eventually coming. It will wear you out, brother. If you don't know what you are doing, market will wear you out. Forex will deal with you. Forex not your mate. So guys, that is what's up with this market. So what I'm expecting this market to do is to actually go up, right? Once it gets to this major, it's not really major, it's minor. It's the minor zone actually. If you get to this supply zone, it will probably break through and continue journey upward, or it will come down. But once it breaks through, if you eventually break through and close this up here with a 4-hour candle, my brother, if you have a buy, you can still enter for a buy because it's going up, right? Because once it breaks through this, I expect it to go up, retest, and then continue its journey upwards. And once it gets to this level, the chances are that it's going to come back to retest this trade, this zone here. This zone is a very strong zone. If you are in this market right now, you should be careful of this zone. Okay, if you are in this market, you need to identify this zone and be careful about it. It's a very, very dangerous zone. Okay, the market, it has always turned the market around in major places. It did that here, it did that here, it did that here. I'm sure if you go back also, you might notice it. Okay, it did it here too. It always tell the market, oh, my brother, get back. So there are chances that it's going to keep committing the same offense as we proceed. So guys, this is how you trade the market, and your life will be very easy. Even when you lose, like when I hit a stop loss right here, my life was easy. I wasn't feeling it. I've already made the money back, because the money this move took. What's this move? I entered this market right here once I saw this bullish candle at 4 hours, and that's when I entered this market. Okay, I saw this doji, and this was a good confirmation. Okay, but I didn't see. I left. Okay, when I came back, I saw this bullish candle, and then I entered the market, and I was able to bank some profit to this level till I begin to see some misbehavior right here, and I left the market. Okay, and eventually the market dropped and come back to retest here and giving us a double bottom, right? So as long as, now I told you guys, as long as this trend line is not taken out, I'm still having a bullish bias for this market. If this trend line is taken out, that is when my bias might begin to change. Okay, if this trend line is taken out and the market do not come back to start trading above it, my bias will start changing. I will start taking sell opportunities. Okay, so guys, this is how these stocks work. But my overall bias for this market is still my 1,500 pips. I'm still saying it in tomorrow, because the market have not said otherwise. Forget all this misbehavior of going up and down. And if you even go to the higher time, let me show you guys something. If you go to the higher price right now, you'll be shocked what is going on here. I don't know if you can identify what is going on right here. This is a pattern. This is a triangle pattern, right? This is a bullish triangle, right? So the market might just do zig and then shoot up. Okay, if the market eventually shoot up and break out of this triangle, my brother, it is gone. Otilo. If it breaks up, it is gone, and if it breaks down, it is gone. So whichever way direction it breaks, it's gone. But from the evidences I have seen, it's most likely going to break up. Most likely going to break up. So guys, this is what I have for you today video. I hope you have learned a lot from this video, guys. If you have, just go ahead and subscribe to this YouTube channel, like this video, share our video, okay? Share it, let this video get a lot of people that need this kind of information. Thank you guys for sticking with me to the end of this video. See you guys in my next video. Bye for now.